Good afternoon. Welcome to the weekly livestock market update. Actually, it's still morning for some of you. We are a little early today, but we have a special guest who will be joining us here in a few minutes to talk a little bit more about cattle markets and competition in the cattle industry. With us right now, though, University of Missouri, Scott Brown. Good afternoon or good morning, depending on which time zone you're located in. Scott?
Good day, Megan.
It is that's probably a better. I've been gone for a couple of days. I'm still trying to get back into the swing of things. As we get things started today, really not a ton of reports for us to get into. There was some breaking news earlier this week. We're going to talk a little bit about what that potentially could mean for hog markets here in the U.S. But to kick things off, let's recap what happened this week in the markets.
Yeah, so if we look at where we sit as of mid-morning on Friday, we'll start with cattle on the cattle side of the equation. Live cash cattle were up 40 cents this week. Those feeder cattle markets were also higher this week, anywhere from steady to $3 higher as we went around the country. On the futures side, as of 10 a.m. mid-morning, August live cattle futures up a little more than $1.10, and those August feeder cattle futures were down a little more than $2 as of mid-morning. On the beef side, choice box beef prices were up $7 this week, so good to see some increase on those box beef prices. It does leave them still nearly $71 above where they were a year ago at this time, which again, I always want higher box beef prices. Gives us an opportunity for higher cattle prices at least. On the hog side of the equation, cash barrel milk prices this week $1.30 higher. The August lean hog futures contract currently is setting down 80 cents on the week. The pork cutout value higher as well this week, up 2 1/4. That puts it nearly $56 above where it was a year ago at this time. So higher wholesale prices this week, Megan.
All right. Normally we would talk weekly slaughter. Those numbers we're not going to discuss today, but we will have them in your newsletter that you'll get on Saturday morning to talk a little bit about the changes there. The big story this week, Scott, African swine fever, first time in the Western Hemisphere in about 40 years. And it looks like the market, when it kind of leaked out, took a little step back, but it seems to be not necessarily having maybe as volatile of a reaction as we could have thought, or as bad as it could have been.
Yeah, that's right. I think we got a little bit of response with the very early leak of that news of ASF in the Dominican Republic, but really hog markets have been fairly good as we've looked through the remainder of the week. And I think that's a little bit of folks who at least taking a little bit of stock in what's happened with ASF in the Dominican Republic. That does not mean it's here in the United States, number one, which is the biggest win that we have thus far. I think there's still maybe that little bit of concern as it gets closer to us that could we talk about ASF in the United States? But for me, this is always 0-1, right? It's always hard to predict African swine fever as it moves, but as long as we are able to contain it outside the United States, that leaves our export markets open for us, and that should help us on the hog price side.
How do we think about this in the midterm and maybe long term? Does it put us at even greater risk that it potentially could make its way into the United States? And how do producers know that potentially could happen and mitigate some risk or limit some risk in the long term?
Yeah, so the question is very good. I often will say I think having ASF in the Dominican Republic maybe has some increase in the probability it comes here to the United States. I don't want to suggest that's a large probability, but I do think from a risk management strategy or standpoint, producers have an opportunity, given where futures markets are today, to take some of that risk out of the picture. The thing we do know, I think, is if we were to talk about an ASF outbreak in the United States, we'll get lower prices. So figuring out how to, if you can't handle that risk in your operation, using futures markets to try to limit that downside might be something we want to think about. And again, I say that in what our prices futures contracts out ahead that I think still at least give us some chances of profitability as we look ahead.
Probably something that will continue to dominate our conversation, or at least show up in our conversation over the next weeks and months as we look at the hog markets. Really the only report this week, Restaurant Performance Index. Take us through those numbers.
Yeah, so another good Restaurant Performance Index report this month, Megan. If we look at the June 2021 numbers, we were up again in the overall index by 0.1, so small increase. I think this is another index that certainly has to deal with what were very low or muted numbers that we were getting in the worst of the pandemic last year. So it's a little hard to read too much out of them in terms of their overall level. I will say we can do a little bit of comparison back to 2019. When we think about sales numbers that we have, the survey will suggest more than 50% of the folks reporting would suggest higher sales in 21 than they had back in June of 2019, while a little less than 40% are actually reporting lower sales. So a little bit of mixed bag there. I think that has a little bit to do with which part of the country you're in. When you look at those expectations, we often talk about what's ahead out of that Restaurant Performance Index. Only 9% of those polled suggested that they think economic conditions are going to worsen in the next 6 months.
Definitely something interesting watching. How, as we think about that, does obviously have a little potential for volatility in it, as well as we look at rising cases of Delta in some parts of the country. And what does that mean as we think about this looking ahead? Or does it help knowing that restaurants were able to maybe shift their focus, and while things changed, we're able to hold on a little bit as well?
Yes, I think there is some concern about the increase in cases that we have. I think it's important to remind ourselves that, back in 2020, we had restaurants shut down, right? And I look at where we're at today, and so maybe indoor dining could go lower as we look ahead. But I also think those same restaurants have done very good at pivoting to the takeout delivery side of the business. I think that changes what we see in response to COVID-19 cases, as we will continue to keep that food service side more alive, if you will, than we would have back in 2020.
Before we ask Carrie to join us, let's preview ahead next week's reports. A little bit busier of a week for us.
That's right. A little more demand news. We'll get a jobs report out next week. Also gives us monthly trade data to see where we're at on the demand side from an export perspective. And we'll end the week with what USDA will report in terms of land values.
Plenty for us to talk about next week as well. I'm going to ask Carrie Jacobs, who is an extension specialist at the University of Missouri, to join us now. Carrie, thank you so much for taking some time and stepping in and talking with us this afternoon. We appreciate it.
Yeah, thank you for having me.
One of two hearings this week talking about the cattle industry and cattle markets in general. You testified on Wednesday with the House Ag Committee. Let's start first and talk a little bit about the focus of that hearing and some of the things that were brought up during it.
Yeah, this hearing was really about the resiliency of the U.S. beef supply chain and seemed to focus on really three things. There were a lot of issues circling this, but pricing, price discovery, and reporting in livestock, some security vulnerabilities. So there was an expert that testified about cybersecurity, and then livestock producer margins as they relate to capacity. And this, we know that really came to a head during COVID and some other disruptions in the last couple of years. And one of the things the subcommittee was interested in understanding is whether producer ownership as a model can work, and maybe how best to support that. And that's kind of where my role was.
So let's talk a little bit about the subsidization of capacity and how that could help with that. What are your thoughts as we look at that as a potential solution or a partial solution to some of the challenges?
Generally, we know that extra or excess capacity benefits livestock producers, and conversely, tight capacity benefits the processors. So, two experts on processing capacity and livestock supply chains testified during that hearing that subsidizing additional capacity now could maybe be solving a problem that's in the process of already correcting itself. As you know, capacity is expensive to build and maintain, and that's one of the themes that keeps coming through. My own viewpoint is that pricing and capacity issues may be symptoms of a bigger issue, one of which I believe is lack of options livestock producers have in their supply chain, and specifically, excess capacity may not be needed if the right amount of capacity is controlled by producers. And so, my comments were about needing research to understand what capacity is needed and how regional it can be, and what the benefits are to having livestock producer ownership in that.
So we're talking like more of a cooperative type model into the supply chain aspect of this, correct?
That's right. That's right. And we don't see a lot of cooperative models. There are a few smaller examples, those co-ops who have focused on more of the niche markets, but otherwise we don't see large scale producer ownership in a cooperative form in the beef industry. And one example in the pork industry would be Triumph. And I think the difference between what we see in pork versus beef is that pork producers tend to be much larger, at least on average, than some of our livestock producers are smaller or with smaller herds. So coordinating to reach an appropriate scale and processing might be more challenge. I think is one of the challenges. Other challenges are things like genetics and capital investments. I'm not a genetic expert in either pork or beef, but I understand that there's less diversity of genetics in pork than there are in beef, and that could be one of the challenges also to trying to scale up capacity. But it's certainly a question that I'm interested in from a collective action perspective and hope to be part of investigations on. We do know that it probably comes down to a lot to the capital investment and challenges in organizing a diverse group.
Scott, you and I have talked about the whole building capacity as a way to maybe increase competition and address some of those issues as well. But do we potentially over increase, and how could that potentially disrupt markets even further and push prices lower?
Well, so it's certainly razor thin, Megan, that we know, and capacity that we might need today and capacity we might need a couple of years down the road. I keep talking about the drought in the West. It certainly affects that balance, and I think that any excess capacity is always going to come at a cost for us. So the industry is certainly going to try its best to make sure that we're right on the edge without having too much extra capacity. Yet when you trip over the other side, that's where I think we get into trouble with lower cattle prices, yet higher beef prices that go along with those lower cattle prices.
Carrie, when we talk about this model or this thought, what are opportunities for livestock producers as they look at this and as we continue this conversation?
Great question. Very clearly, there are scale economies that need to be met and overcome. And I think we need more information about where the returns on a per head basis may stabilize, at what capacity, enough to provide profitability to be sustainable. And so I think that's one of the benefits of the cooperative system. A cooperative type model is the profitability then gets transmitted back to producers. And so you may not need the same level of profitability that some of our current processes are earning in order to make that sustainable for them. I also think it's worth investigating how the European markets manage with a more regionalized system. They didn't seem to have the same disruptions we had, for example, during COVID. So I think we can learn something from their experiences there as well. And finally, this came up during the hearing as well, that livestock producers have quite a bit of momentum already in local markets and niche markets and marketing direct to consumers. So one way forward is potentially working to scale those up through producer ownership and cooperation, shorten that supply chain for our livestock producers. One successful model of that is Country National Beef out of Oregon. I think they have a nice model that we can use as we're thinking about what this looks like going forward. Effectively, they are leasing, the cooperative is leasing processing capacity instead of building it, which cuts down on the initial capital investments that they were required to come up with.
Is there opportunity for that in other areas? Are there places where groups could come together and find a place to lease, since you're seeing success in that model in that area?
I hope so. Anecdotally, we hear about this in Missouri, looking for opportunities there. So I do hope that there's an opportunity to build that capacity over time, rather than, for example, bringing a bunch of capacity to the market at a time when that might not be a smart thing to do, and government investing in that. That's a one-time shot in the arm, but we want to make sure this is sustainable.
Scott, you and I talk about diverse opportunities for as a form of risk management. I think about these niche markets or the locally grown or grass-fed or whatnot. Is that an opportunity to continue to maximize that potential profit and use that as another form of risk management in operations?
I think it does have the potential to smooth out returns, at least going forward. So you're really buying your way up the value chain, where you hope that sometimes what might be a tough time in the cattle side of the equation becomes better when you're talking about marketing that beef. So I do think that opportunity is there. I always like to remind us that, as you go up the chain, that's a new enterprise, and you need to be good. You need to be a good cattle producer. But if you're going to market and hit those niche markets, you also have to do that as well as you're growing cattle, or at least find ways for that to happen. So it's not easy, but I think there are some opportunities, especially when you see what appears to be consumer trends that suggest we're going to be more focused on those kind of local markets as we look ahead.
Carrie, one last question. I appreciate you again joining us this afternoon to talk a little bit about these. When we talk about investments, and we've heard a lot about funding to help build capacity, but what types of assistance and investments by the government, by USDA, would be needed to assist and help with these?
Another great question. So I think we've talked about a lot of things that fall in the realm of indirect investments, to use a term Scott and I were talking about. Number of efforts the federal and state governments and the USDA can help explore into these types of indirect investments. And I would first start by saying, of course, I'm talking about cooperatives and producer ownership. So I would encourage states to make sure that they have the appropriate laws in place that are flexible enough to allow producers to organize this way. But beyond that, legal and technical assistance, helping with coordinating with downstream partners, maintaining niche markets. Other things we've heard that producers need are things like loan guarantee programs to help mitigate some of the risk or take down some of the risk that lenders face in loaning to startup opportunities here. Workforce development is certainly among this. Skilled labor is a key input to processing, and there's no question that labor availability remains a challenge. Again, I said, helping them protect their niche markets. There's labeling regulations and laws that can be looked at, and then helping ensure that some of the compliance costs that livestock producers and that processors face are not disproportionately affecting the livestock producers in those smaller to medium-sized plants. And then finally, investments in automation. That came up a lot during the hearing, this idea of needing to invest in automation and new technologies. And so I think, although that could be a ways off, that could be a key to smaller processing efficiencies.
Does that potentially, though, I mean, I think the one thing that as we have more conversations about this, that seems to be a theme, is that there's not one silver bullet. We need a lot of different or a combination of unique programs or unique opportunities to really address this and put producer profitability at the forefront. What are some other aspects of this, Scott? You and I've kind of touched on this a little bit, that we need to look at when we're trying to maximize our our producers' profitability and make sure that there's some equity in profitability for everybody.
Well, so I often say, I think a lot of this discussion is how do we smooth the path of return. So right now we're in a situation where it's tough on the producer side of the equation, just given cattle prices are low. We have box beef prices that are at the high end. We could look back to 2014 and we'd have the flip of that, right? So processors were running a lot of red ink, yet cow-calf producers saw calf prices they hadn't seen in forever. And so being able to use this as an opportunity to smooth, I think that helps in this whole discussion of risk, if you will, Meghan, because we're less volatility as we hopefully buy our way up the value chain. I think that's the win we get out of having much of this discussion looking ahead.
And providing value or continuing to provide quality is also adding value to producers as well.
Yeah, so you connect yourself closer to the consumer at the end of the day, and you make sure you're putting in front of them what they really want. You hear me get on my soapbox quite often here about hitting the consumer target is the win at the end of the day. Carrie alluded to genetics, and I go, the opportunity to coordinate genetics and hit a niche market. On top of that might be a carcass that looks a lot more uniform across those that might be working together, and that might allow automation that often today is tough when you have carcasses that are so different as they go down that line.
Carrie, any other final comments before we let you go this afternoon? I again appreciate your time greatly.
Yeah, thank you for having me. And just, I'm excited about the opportunities that exist here. I know there are a lot of things that need, that have to be overcome and things to consider. This is not an easy problem to solve. And I would say that I certainly am not so naive to think that a cooperative is a fix-all for everything. There's got to be profitability in the system and a system that works for everyone. But I do think there's some opportunities in this space, and I'm excited to see how this comes through.
Carrie, Scott, thank you again. Scott, we will see you next Friday.
Have a good weekend, Meghan.
Thank you,
You
Meg.
too.
Thanks, Scott.
To have our weekly livestock market update delivered to your email box every Saturday morning, go to brownfieldagnews.com. You can also submit questions there as well. And for all the great Brownfield podcasts, go to brownfieldagnews.com/podcast. Have a great weekend. I'm Meghan Grebner for Brownfield.